Am I allowed? I'm going to quote one of the members of the panel, something they just said to me, which is, if we can deal with this topic, we can deal with anything, right? This is a really, really interesting panel. It's going to be a really interesting panel, I think, because we're living in really unpredictable times, and we're all dealing with challenges in different ways, whether we're dealing with end clients or whether we're dealing with, head offices overseas or whatever. Things are quite tough. We've seen the belittling of ESG. We've seen people moving against net zero. We've seen political parties saying they want to get rid of the Climate Change Act. These are not, if you like, sustainable investment fund friendly times. However, at the same time, the positives are that we're clearly having an effect, because people wouldn't bother pushing back against all this stuff if they didn't think it was going to make any difference. If they weren't at all concerned, they'd just ignore us, which is what happened for the first 20 years of my career in this area. So you know what? There's good and bad news to that too. So yeah, interesting times. With all of this, I'd say to fund managers, clearly we are videoing this, but if we need to edit something out, we can do. So please speak freely. I'm sure Ollie will really appreciate me saying lots of complicated editing, but our film crew are very capable, so if something does need to be done. So without further ado, I'm going to ask you each to introduce yourself. So the purpose of this obviously is to talk about geopolitics. So should we start with Adam at the end? I think it will do if you start talking. I think they'll... Okay. And mic on, yeah?
Okay, that's better. Yeah, good morning, everyone. Adam Robbins. I'm Head of Business Development for Triodos Investment Management.
Morning, everyone. I'm Siân Jones, a Stewardship Analyst at Sarasin & Partners, focusing on social value chain.
Morning, everyone. I'm George Crowdy, a Senior Fund Manager at Royal London Asset Management, managing a range of our mixed asset and equity funds, including global equities and UK equities.
Thank you. So I'm going to start by asking you to just identify for the audience, please, what the main challenges are geopolitically. Honestly, it feels to me like it changes most days. But from the perspective of running the funds and doing what you do, ask for volunteers who wants to kick off first. But what are the main issues that you're facing, main challenges geopolitically? George, would you like to start?
Yeah, I mean, I think when we think about investing today, it is just such a different backdrop to what we became very used to, really, from the financial crisis up until the COVID pandemic, which, from a macro perspective, from a geopolitical perspective, was a much more stable environment. And I think companies and investors have just had to become a lot more used to uncertainty and volatility, and that certainly plays on our minds. I think, there is clearly a depolarization and different trends happening in different parts of the world. I think it's fair to say that we are seeing a rollback on sustainability and ESG initiatives in the United States, but actually I would argue the opposite is happening in Europe and also in Asia to some extent. But we really spend our time looking at companies. I think actually trying to predict what's going to happen in terms of politics or in terms of relations between countries is increasingly challenging. I can't think of a single macroeconomist who's got that right over the last few years. But when you look at companies, I think this is really where sustainable investing can add a lot of value. I mean, companies that are leaders in sustainable investing are the ones who are thinking further ahead into the future and trying to build their businesses around these really attractive structural growth themes, which are helping address societal and environmental challenges. And we think that gives us a very clear compass to follow when it comes to thinking about the opportunity set. But I would very much expect volatility to continue, geopolitical tensions to be increasingly important, and have an impact in the way that what drives success and failures within markets. I mean, these companies that have been interacting, raising standards within their supply chains over the past few years. I mean, those are the companies that have been able to serve their customers better through the supply chain challenges around the pandemic and more recently the Liberation Day tariff announcements. And I think it's just a great example of kind of doing the right thing from a sustainable perspective, building more business resilience.
Thank you. So it touches everything. Siân?
I think, definitely looking at it kind of from our stewardship perspective at Sarasin, we can't ignore climate change as a rising issue. It would be remiss of us not to mention it on this panel, and it's something that we're continuing to engage on, despite obviously, the kind of political rollbacks that we are seeing in terms of commitments. But as well, I would probably touch on, the rising conflicts and global tensions that we're seeing are probably shifting the way that we need to look at human rights as well as investors, and through a stewardship lens, the fact that we need to be making sure that companies are doing their more heightened conflict-specific human rights due diligence to understand, how their activities are impacting conflict zones and how they might be having human rights impact there. So I think for us, we're definitely shifting a little bit of our lens on the focus around human rights as well.
Thank you.
Yeah, to add to that, Triodos, as a positive impact investor, is only looking at companies that are doing the right thing. So it is reassuring that there are firms out there that continue to do this despite all of these geopolitical issues. But I think on a wider scale, at the moment, the political divide is framing sustainability as a political choice. So, this is an issue, and it's changing the view of sustainability away from being an urgent common goal. There's rising inequality taking place both domestically and internationally as well, which means a shift to sustainability and a more sustainable planet is harder. And global financing for sustainability is hugely under pressure at the moment. So we have obviously ongoing conflicts, geopolitical risks, and they've shifted priorities and spending over towards security, defense, and AI. And when you have policies that are focusing on defense and arms, which in our view are things that are not having a positive impact or in no way sustainable, that makes this a really tricky environment as well. And I think, everything that you've already said about the US is obviously very prevalent and is having a major impact and effect on everything that's taking place. But let's also think about the reduction in US aid as an example for the support of the global economy as well. So yeah, there is an awful lot having an effect on what we're trying to do in this space.
Okay, so can we tie down any of the specific issues? Also, we've got the change in defence, and you've got the whole tech movement and the way the pressures on human rights and everything. Any particular bits you can hang your hat on saying, well, this is impacting our fund directly, perhaps relative to other funds, or in terms of your asset selection, does it vary between asset type, or is there anything you can expand on that, maybe, George?
Yeah, clearly the strength of the defence sector has been a result of the elevated geopolitical tensions that we've seen, and as sustainable investors, that's typically an area of the market that most people wouldn't have exposure to. I think it's fair to say we found lots of other opportunities in other parts of the market, which has helped offset that headwind. But otherwise, I really think it's this trend away from global businesses to more local businesses as a result of geopolitical tensions, and that's certainly where we're spending more of our time, really trying to find the local leaders that are serving a local customer base with more local supply chains and having more business resilience as a result of doing that, and quite frankly, not having to face the kind of ever complex playing fields around us in terms of doing global business. Okay, so does that mean a shift towards, this is, sorry, not on the script at all, but does that mean a shift towards mid-caps more, does it? More so, yes. If we look at the types of holdings we've been adding into our portfolios over the last couple of years, there's definitely been more of a skew towards that more mid-cappy part of the market, because they're often those companies that are just doing business in a few geographies. Cool. Siân? Yeah, so I think one of the kind of biggest points that we've been focusing on as a stewardship team is our investments in tech and the growing risks that we're seeing from AI and the proliferation of kind of, online platforms as being kind of a space for discourse that we want to look at all of the ESG risks that are happening there, because I think as a hugely growing sector, it's amplifying so many risks. Yeah. We're looking at data centers and the huge power demand that they have, and the water cooling that's needed for them, that's going to have all these environmental impacts. But then we're also looking at the social and the human rights angle of misinformation spreading online and content moderation being rolled back, as we've seen, like with the likes of Meta this year, taking back their kind of
forward stance on content moderation and really allowing users to basically, regulate themselves, that's really not having a positive impact. So for us, we're really stepping up our engagements on those kind of big tech companies, looking at how they're having human rights impacts, looking at, the lawsuits that have been coming through in terms of the impacts that they're having on conflicts globally. I know that Meta has recently been having litigation around conflicts in northern Ethiopia and how its algorithm kind of picked up hate speech and incitement on its platform during that conflict and actually really exacerbated it. So it's an interesting one for us to kind of grapple with all of the different angles that we can take on the tech industry and how much of our holdings it represents as well.
Yeah. Because, of course, you guys lean in heavily into the stewardship bit, don't you?
Exactly, yes,
raise
exactly.
standards that way rather than necessarily exiting. And I guess I try and capture all the different strategies and go, they're all good, just try and match them to your clients. Yes. But yeah, so companies like Meta, obviously, lots of conversations to be had. Adam?
Yeah, so obviously we have been impacted in terms of the Big Beautiful Bill, reducing the funding for renewable energy. So that had a negative impact on a number of our funds. But they've improved again. So renewable energy is back up, but it was starting from a low base. With regard to tech and the Mag 7 as an example, that's clearly driving the market sentiment at the moment hugely. So for us, we only hold one of those. We don't believe in the others as being positive impact for reasons various. But again, AI is also driving a lot of this, and how that's going to play out will have an effect on what we're doing. A bit like yourself, George, we're also noticing a lot more resilience and robustness in the small mid-cap space as well. So we're more bullish on that front for sure.
That kind of shouts opportunity to me, but anyway, that's not a bad thing. Digging down then, I wanted to also ask you questions, because this is something I get asked sometimes. How much are companies really changing? I mean, you're talking about deglobalization and that kind of thing, so that clearly is a shift. But, really, are companies, they're being put under pressure on DEI and net zero and, loads of things. Are companies really, really changing in terms of their values and how they operate? Adam, do you want to start on that one?
The pressure on the institutions across all sectors is huge at this moment in time, and particularly being driven by what we're seeing in the States. Active engagement and stewardship is something that's critical for us in our listed space, and we take that very seriously. So we interact with all of our companies, we meet with them, and obviously we keep an eye on everything that's being reported and the documents they release. And as an example, one of the companies in our large cap fund in the US. In the latest report that was released, we noticed that DEI had disappeared completely. So there was no reference to this in the slightest. So, of course, our analysts and those that lead the advocacy reached out and started having conversations, and nothing has changed. It's just been rebranded and retermed in the articles that they've released. So, the pressure is for these companies, everybody, to be seen to be doing the right things in the eyes of where the pressure is coming from. But actually, we're not seeing any material changes in what they're doing, which is reassuring. And again, you would kind of hope that's the case when you really spend time looking at a company, analyzing it, making sure that it does what it says it does, and it is actually having a positive impact before it even makes it into the portfolio. So yeah.
Yeah, I think DEI will probably be the example that comes to mind for me as well, where the match between what companies are saying and what they're doing is a bit more unclear now, with obviously, as you mentioned, like in the US environment, it's very difficult for companies to hold firm on all of those commitments when there's executive orders, halting all DEI in federal agencies and really putting pressure on corporates to step away. But I do think that there is a bit of value around what companies are saying, because if we're recognizing that diversity is so important for business, it helps avoid groupthink, it spurs innovation, and attracting a diverse workforce is really important to companies, then the way that they position themselves externally and the things that they say also do matter. So stepping back publicly and having their name in media headlines as stepping back from DEI, even if they're still under the surface doing those things, it's not going to be great for them in terms of attracting a diverse workforce. So I think there's a really tricky balance to strike in terms of, reaping the rewards from diversity initiatives, but also dealing with the the political climate.
Yeah, I would certainly echo those comments that have been made. From the companies that we invest in, I don't think I can point to a single example where anything's been rolled back or changed, but certainly the way that things are presented has had to evolve. I mean, one example is a company that operates in the transportation space, which was very much focused on using decarbonisation as its key slogan. It now talks about efficiency. It's exactly the same thing. Similarly, companies previously talked about DEI. They now just talk about ways to enhance and foster a great culture. Very much the same things happening under that, just a move away from using some of the terms which have become a lot more politically charged. Yes, it's disappointing to see companies feeling pressured to step back on some of these things publicly, but actually in terms of what they're doing on the ground, these companies that we're looking at are doing it because they think it makes great long-term investment sense, and there's no change to that.
And so with all that change in language and all this background generally, is it changing what you do? I mean, are there areas you've kind of gone, do you know what, we just can't get this information anymore, so let's just forget it? Or is it things staying the same? Maybe Siân, if you could start on that.
Yeah, definitely. I think from our perspective, as you just mentioned, George, we see stewardship and we see sustainability as making long-term investment sense. So in that regard, our approach won't and can't change. I think in terms of stewardship, we're really using this as an opportunity to double down on our efforts, reaffirm our commitments, use this as a way to differentiate ourselves and say we're holding firm on what we're doing. I think obviously it has become a bit more unclear maybe for some companies in what they're doing, and their reporting may have changed, but I think it just makes those conversations that we're having and having that active stewardship approach even more important, to be able to talk to companies one-on-one, have meetings with them, affirm to them how important we understand sustainability to be and all of these issues. So for us, that's the approach.
So when you're talking with the companies then, are you pressing them on language, or are you just making sure you get the sentiment that, yep, okay, they're still serious about this?
I think it will be a mix of both of those things. Obviously, we are hearing from companies that the environment is challenging, so there's only so much pushing we can do on language when they're in a difficult position themselves. Yep. But obviously what we're really interested in is in what's happening and what they're doing. So that's what we'll continue to press for change on.
Yep, cool. And I've lost track of who I've asked. Is it Adam? I haven't asked on this one.
No, I mean, I don't really have much more to add.
Are you changing what you're doing? Yeah.
We've not changed anything. We won't. We don't react in that manner. We stick to kind of the fundamentals that we have as an organisation and the principles around investing. And yet, it's probably just sharpened the conversations with the portfolio companies to make sure that the sentiment is there, for sure.
Okay. And are there any, I mean, again, this is off script, but any changes with how you're viewing things like armaments industries? Was it just you've got your strategy and that's...
No, so again, I mean, so we have a very clear set of kind of minimum standards. So we look at making sure that none of the companies that we invest in or fund or anything contravene those minimum standards. And, a zero tolerance to arms and weapons has always been in there. That there is... although the minimum standards are reviewed on a regular basis to make sure they're still relevant, that is one that has not been altered. So no, and we don't see any reason to change that. There's no positive impact from arms and defence. Okay.
And is that the same for the others here? For Siân, you?
Yes, sticking to existing policies on that.
So is there anything we can say, this has made us change our investment strategy because of this? Is there any... No, and I think to me, that's the key message. That's what I've been hearing too. But I get asked that by journalists a lot, so guessing that maybe people here today might want to know the answer to that also. And we have got 2 questions coming. Frank has put up a red card, so one here and then the gentleman behind afterwards. So if you didn't hear red cards, if you don't understand what someone says.
Thank you very much. Gillian knows that I come from a Polish and Croatian heritage. So my existential relationship with defense companies is there. Knowing that a lot of European companies will be buying controversial weapons to protect the eastern sort of flank, should asset owners and asset managers engage actively with defense companies and make sure that if these weapons are going to be produced, limit their long-term effects? And I'm thinking landmines specifically.
Oh, yeah, a bit of an issue for Croatia. Yeah. Any suggestions to that? But the risk always is with that kind of question with an audience, like with a panelist like this, because it's outside of their remit, that's not probably what they do. But as an organisation, do you happen to know if your companies are having, we've got conventional, unconventional, and all the horrors of the different types of weapons. Do any of you have those kind of conversations, or would that be one for your colleagues, perhaps? No, okay. We're going to have to park that one, Frank. Sorry, no answer to you there. Gentleman over here. Sorry, Frank. We'll have that conversation another day.
As a follow-up to that, where do you view suppliers to the defence industry, i.e. a ball bearing manufacturer whose 10% of their revenue might be coming from a defence? Where do you draw the line on that?
Does anyone want to answer that? I can give you a general.
I can give our stance. I mean, we very much look at things in the supply chain which are specific for the defense industry very differently to general purpose technology. It's almost impossible to avoid companies that have exposure to the defense industry if you're trying to build a diversified portfolio. I mean, even a software company will inevitably be selling into the defense sector to some extent. But anything that's military or defense specific is where we, that we have very clear thresholds that we wouldn't invest in there.
And this is why you've got to have clearly documented policies which spell out exactly what you do and don't avoid. But
it's very much about the positive impact from there. I mean, if it was a company that was materially improving efficiency or safety standards and had a degree of exposure to the defense industry as a result of doing that across many other industries, that might well be acceptable to us.
Yeah. Likewise, people supplying food or whatever. Yeah. Any other comments on defense that you want to come through on that? No. Okay. So I think Seb was trying to come in with a question as well.
Yeah, actually, I had two questions, if that's okay, just to push a little bit further, because I just feel there's more going on. In terms of, companies that may have explicitly rolled back targets, some of the banks, the oil and gas companies, has that changed the nature of your conversations with them? I guess that's probably mostly for Siân. And then the other question is, has there anything positive come from the geopolitical changes that we've seen? Has there been,
That's my next question, Seb.
Oh, okay, apologies, sorry. Maybe just stick to the
I'm
one.
going to say here that Seb's a fund manager.
But on the banks, where there's been an explicit change of direction from one of your holdings, how does that change the nature of your conversation with them?
Yeah, I think off the top of my head, I can't think of a recent engagement where we have had that explicit change from a portfolio company. But one recent engagement that we have kind of made public with Equinor is around their commitments. So they have commitments to be 1.5 degrees aligned, except when you look under the hood of that and at their kind of capital allocation and at their their strategy, it just doesn't really make sense. It doesn't seem possible. So we kind of look at those at kind of a systemic level and try to engage there around policy. And so in that case, we wrote to the Norwegian FSA and flagged it to them as a greenwashing example, basically, and said, look, we don't actually think that this is true, and we're worried about the validity of this commitment. So for us, I think looking at what's really happening with those kinds of commitments is really important.
Yeah, which again brings us back to the not misleading people, the anti-greenwash. Wherever you are in the chain, this stuff matters. Kate.
Hi, this is a question more about your stewardship rather than your actual holdings. So how many of you still use a US-centric proxy voter like ISS or Glass Lewis who have softened their voting stance because of the geopolitical pressure that America has on litigation on US companies, on DEI, etc.?
I can start on that one. So we do use voting providers, but we have our own very, very detailed voting policy that we use as an overlay. So anything that we wouldn't agree with them on gets flagged to us, and we make that decision ourselves. So we're not using kind of their standard setting. We're definitely doing it ourselves.
That's exactly the same at Royal London as well.
Yeah, ditto.
Cool. And we have another question over here, another Seb.
Hi, just a quick question on 1.5 degrees alignment, or two quick questions. What was the global average temperature last year?
Sorry, say again.
Sorry, what was the global average temperature last year? And what is science telling us about our understanding of the Earth system to the sensitivity to greenhouse gases? Why are we still talking about 1.5 alignment?
They were quoting what Equinor was saying. That's the point, Seb, I would say. That's exactly what Sarasin are arguing.
Yeah, exactly.
We're clearly not doing that.
Taking issue with their commitment, so yeah.
So, yeah. Right, so that brings me to the next question, which is any positives? I mean, are there any positives to be had? I mean, clearly we're in a bad place. And I don't know if you saw my opening slides talking about the University of Exeter Institute of Actuaries work that they're doing that, just says the context of all of this is a shocking backdrop that we're all terrified about, which is why I hope you've got fund managers who are challenging people like Equinor, because they're clearly busting what they're saying. But are there any positives? I mean, does it give us maybe free rein to go a little bit louder? Is there anything good to be said by this? Any volunteers? George, you look really enthusiastic.
Yeah, I'll have a go at this one. I mean, I suppose, I think there's a high chance that it will lead to more business resiliency longer term. I think it's fair to say a lot of companies had built their business models in quite fragile ways, focused on lowest cost of manufacturing and doing business. And I think geopolitics changes that and puts a greater emphasis on business model resiliency, which is probably the right thing longer term. And combined with that, we are seeing big fiscal stimulus programs from all major economies to help support that investment to drive that, which I think does broaden the investment opportunity set at the same time. But yeah, that's one positive, I would say, from an investment opportunity perspective.
Yeah, I guess the more they've got to think through different scenarios, the more robust they'll become. Either that or they'll just duck out, in which case you can sort the wheat from the chaff a little bit better, perhaps. Any other takers on any possible positives?
I think really what we're seeing here is this is just an opportunity to continue what we're doing, but also try and look at this in a really smart way and address things that obviously there's an ESG backlash, and maybe we can look a bit into the reasoning why people are frustrated with greenwashing. They're frustrated with not understanding what the meaning of ESG commitments are. So we can really use our stewardship to try and encourage our companies to be as clear as possible with their commitments, as transparent as possible, and really give it some meaning.
Yeah, I'd agree with that. I think the transparency piece is a big opportunity for us, all of us to really articulate clearly what we're doing and highlight the differentials there. And I'm encouraged by some of the things I see in Europe in the institutional space as well. So if you look at the Dutch pension market as an example, where we're very active, all of the big Dutch pension schemes are allocating to impact now, either in real assets or in the listed space as well. And you may or may not have seen recently that one of the largest ones recently fired BlackRock because they didn't meet the requirements any longer. So for me, there is some positive sentiment in this space as well. And I was talking over coffee with a friend. Based on the previous session, there is a lot of interest in what's happening in this space: sustainable investing, impact investing, ethical investing. And we're just people are not quite stepping over their shadows at the moment to put their money where their mouth is almost. But I think that is starting to change a little bit. And I think that we will start to get some tailwinds in this space as well. So yeah, I'm positive.
And again, unscripted, so ignore me if you wish, but opportunities for Triodos as a bank. Obviously, your parent company. I mean, banking, financing dirty stuff that's trashing the planet is undesirable. Are Triodos kind of making hay there a little bit?
Yes. I mean, it's an interesting point, Julia, because our parent company is the bank. We have very strict standards on whether we can invest in financial institutions. So that look-through on what the banks are funding and lending to is critical for us, which means that most institutions don't meet our criteria. We are seeing increasing customer numbers across all the countries that we are active in terms of clients and the assets they bring to the bank. Unfortunately, it's probably similar to what we experience in this industry, that quite often what some of the more mainstream entities and the larger ones are doing is good enough for clients. And that's where it will finish. Same as a lot of firms will look at asset managers and say, okay, I'm not prepared to take a risk on a different type of asset manager here, or someone who's doing something a bit on the periphery, let's say, from the mainstream. So they won't take that risk. And I think a lot of banking clients are in the same boat.
That's really interesting. And that leads me on to the next question about where we see this going forward. So if we look forward to 5 years or perhaps more, I mean, it's about client trust, and it's about people understanding and getting the information and good enough versus, no, this is the future we want. Do we have any thoughts on I'm not expecting you to have a crystal ball, so don't worry, we won't be reviewing this in 5 years' time. But Siân, do you have any thoughts on this going forward?
Yeah, definitely. I think, from a client perspective and from a stewardship perspective, these matters just continue to be more and more important. Climate change is not really going anywhere, unfortunately, at the moment. Human rights risks continue to rise. AI and tech continue to proliferate. So for us, I think in 5 years, we'll still be looking at these issues, and we'll definitely be having still a strong approach then, and it just continues to become more important to actually address these topics.
And hopefully that's helping people to see the crossover between human rights and climate, and help people to bring it all together a bit more. I mean, some of the, look at the numbers on, well, a lot of known this for a long time, but if climate change lets rip like we fear, then that's going to cost an awful lot of lives, billions.
Absolutely.
George?
I mean, I think it's fair to say that geopolitics is here to stay. I think we have moved into a new operating environment, a new market environment on that front. But it's almost impossible to say what that looks like in 5 years' time. I mean, I do think a lot of the big trends related to sustainability and sustainable investing remain as relevant as ever, and the companies that I talk to very much understand that and are benefiting and profiting from that. So I think you do need to evolve portfolios. I think the world is very different to what it was 10 years ago. But I think partly as a result of geopolitical tensions, you can find more opportunities in more different parts of the world, which I think makes it quite an exciting time to be an investor, actually.
For sure. I think, lots of different things to look at. I'm going to give you the last word, Adam, if I may.
I'm just going to echo what George said about that. I think this is a great opportunity for active investors to kind of really view all of these geopolitical policies on a case-by-case basis, and manage the risks in the portfolio and the opportunities as well. And I mean, it's almost impossible to predict what will happen in 5 years. But if you look back where we were 5 years ago today, this is almost incomprehensible. I think on an optimistic note, with the growth of AI and everything being driven by that, I'm really hopeful and believe that will drive the need and the growth of more renewable energy and fuel that energy transition, because there need to be more energy efficient solutions to power those data centers and things. So I'm going to finish on that one as an optimistic note.
So uncertainty creating opportunities, particularly for actives, because you can't expect everything to move together now. That's really interesting. I mean, really, I don't hopefully think we've said anything that's going to get any of you in too much trouble, hopefully. And all I can say now is thank you so much. If we could thank them, please.